Today, we're going to decode the latest quarterly earnings report from the materials science giant Dow. So let's just jump right in.
These reports are so much more than just a bunch of numbers on a page. They're a really crucial snapshot of a company's health, a peek under the hood of its strategy. And honestly, they often give us a heads up on which way the economic winds are blowing for everyone.
So in this explainer, we're going to dig into Dow's latest quarter. We're going to explore the challenges they're up against, the big strategic moves they're making, and really the story that's hiding in plain sight right there in the financial data.
All right, so first things first, the scoreboard. How did Dow actually do in the third quarter?
Now, what's really interesting here is how the CEO, Jim Fitterling, frames the entire quarter. The key phrases are sequential improvement and continued pressure. That's the whole theme right there. They're making progress, for sure, but they're doing it in a seriously tough environment. First, the big number, a cool $10 billion in net sales. This just gives you a sense of the massive scale of Dow's operations, even when things are challenging. Next up is something called Operating EBITDA, which landed at $868 million. The easiest way to think about this is it's a key measure of their core profitability, basically what the company earned from its day-to-day business before stuff like interest and taxes get factored in. And get this, they still returned $249 million to shareholders through dividends. This is a really powerful signal of stability. It's them saying, hey, even while we're navigating these economic headwinds, we're committed to our investors. So this slide, this is where the real story is. It's like a tale of two different timelines. Compared to last quarter, things are definitely looking up. Profits grew by a solid $165 million. But, and this is a big but, when you compare it to the same time last year, sales are still down 8%. It's a classic story of a short-term recovery happening inside of a much longer industry downturn. And that brings us to our next chapter. Why are the numbers what they are? What exactly are these industry headwinds that Dow keeps talking about? And boom, this map just lays it all out, doesn't it? It shows global demand across Dow's most important markets. See all that red? That's weak demand, especially in big areas like infrastructure and construction. Europe in particular has been struggling for months. And for consumer goods and packaging, it's kind of all over the place. This is exactly what they mean by a prolonged down cycle, all visualized right here. So if you're Dow and you're staring at a map like that, what's your game plan? You can't just ride out the storm. You gotta make moves. Let's break down Dow's strategic response. The headline for their strategy is just massive. They're generating more than $6.5 billion in cash, and fast. This isn't just about trimming the budget. It's about aggressively building up a financial cushion to weather this cycle and come out even stronger on the other side. And this isn't about pulling some single magic lever. As you can see from this chart, the plan has a lot of different parts. The biggest piece of the pie, a huge infrastructure partnership that's bringing in about $3 billion. Then you've got money from a legal judgment, major cuts to spending on new projects, and another $1 billion in cost savings. This is a really comprehensive playbook for a tough environment. And these aren't just ideas on a whiteboard. These are concrete actions that are happening right now. They're cutting $1 billion in spending, mostly by hitting the pause button on a huge project in Alberta until the market looks better. They're well on their way to saving over $1 billion in costs. And that $3 billion infrastructure deal, it's already done. These are some very decisive cash-focused moves. All right, so that's the plan from 30,000 feet. But how is it actually affecting the business on the ground? Let's dive into Dow's 3 main business segments and find out. First up, their biggest segment, packaging and specialty plastics. This is a really key indicator for pretty much everything, from food packaging to consumer goods. And here we go again. We see that same mixed story. I mean, look at the change from last quarter. Profits are up. That's mainly thanks to a new production unit on the U.S. Gulf Coast firing up. But when you compare it to last year, profits are down. Quite a bit, actually. That's because lower global prices for their products are squeezing their profit margins. Next, we have the segment that's most tied to heavy industry, industrial intermediates and infrastructure. This part of the business serves construction, energy, and manufacturing. Now this was the relative bright spot in the quarter. Profits saw a really big jump from Q2. So what happened? Well, they sold more stuff, they had less downtime for maintenance, and a new growth project kicked in right on schedule. It just goes to show that even in a down market, just being really, really good at your day-to-day operations can move the needle. And our final stop is performance materials and coatings.
This segment covers all the high-value products that go into things like electronics, home care products, and architectural paints. This is the segment where the pressure really, really showed. Profits were down compared to both last year and last quarter. It was kind of a double whammy. Profit margins on key ingredients got squeezed, and at the same time, there was a seasonal slowdown in demand for things like paint. So, after that deep dive, let's pull back and look at the big picture. All these tough choices and strategic moves, they're about way more than just surviving the downturn. They're about positioning Dow to win and win big when the cycle finally turns. And this is what that long game looks like. They are streamlining or even shutting down their higher cost plants, especially in Europe where energy costs are so high. They're doubling down on their more efficient facilities in the Americas, and they are absolutely relentless about hitting those billion-dollar cost savings, all while focusing their growth on the most resilient high-value markets. It's all about discipline. Which brings us to our final question. Dow is clearly playing defense and offense at the same time, right? They're managing the present with incredible discipline while strategically setting up for the future. The big unknown is still out there. When the global economy does recover, will all these tough choices have been enough to make sure they don't just rebound, but actually lead the pack? That, my friends, is the multi-billion-dollar question.